Alright, what is going on everybody? Welcome back to the Beginner's Guide to Futures Trading. This is episode 2. So today we're going to be talking about candlesticks, what they are, why we need them, how to read price from them on different time frames, and just a beginner's intro into what candlesticks are, because candlesticks ultimately are the fundamental to trading. How do you trade? You need to read charts. How do you read charts? You read candlesticks. So it's the root. So let's go ahead and get into it. So this is my trading view, right? So most of the time you're going to be looking at charts, and most 99% of day traders are going to be using candlesticks to look at their charts. It's because it's the ultimate way to set up confluences, to set up whatever strategy you're going to be doing. It shows price in such a great way. It allows you to look at what price did within a certain time. That's basically what a candlestick represents. So for example, my current chart that I'm on the hourly time frame. So as you can see, I can go up here and I can choose different time frames. As you can see, I have all the way down to the 1 second, all the way up to the 12 months if I want to, in different time frames. So what this is essentially saying is that each candle that we see here represents 1 hour worth of price action. If I were in the minutes and I chose the 5-minute, each candle represents 5 minutes worth of price action on this pair. Right now I'm on the NASDAQ. Let's go ahead and pick a candle, for example, this one right here. And as you can see, this candle, if you look at the time, it represents what price did on Tuesday, 20th of January at 9 a.m. We go to the next candle, 10 a.m., 11 a.m., 12 a.m., 13, 1, 2, 3, right? So it keeps going. Each candle represents the hour of price action. I think it's pretty self-explanatory. The concept is pretty easy to understand. Now, how do we read this price action? I mean, we see we have a candle, and also my candles are black and white, but white candles represent green and black candles represent red, and you can tell because it's going up and down. What does this mean? How do we read these? Well, any candle that you see consists of two different things. The wicks, which is this part right here and this part right here. We have the upper wick and the lower wick. Oh my gosh, bro, this magnet is diabolical. Upper wick and the lower wick. And the candle consists of a body, which is this giant square portion that we see right here. Whether it's a green candle or a red candle, it doesn't matter. Every single candle that you're going to see are going to have these two things, a body and a wick. With that being said, now we can kind of get into what the body and the wicks represent. So as you can see, the lower portion of the body, I guess this part right here, on a green candle, that represents the opening price. So whenever at the as you can see, we're looking at what, 7 a.m. So as soon as 6:59 rolls over to 7 a.m, boom, it starts a new candle at whatever price it is at that point in time. So at 7 a.m. on the dot, price was about 25,056.8 or something like that, and it establishes the bottom of the body of the candle. Then at the end of the hour, as soon as it goes from 7:59 to 8, starting the new candle, the body closes wherever price went to. So obviously on a green candle, it's going to close higher than it opened, insinuating price going upwards. Hence why the green candle is a green candle, because price closed above the opening. So the top of the body of the green candle represents where price closed at exactly 7:59. The wicks of the candle represents anywhere price would have been within that hour. So let's say price started here, and then throughout the hour, price kind of goes like this. It goes up, and it goes up a little bit more. It's like 7:30 now, price goes down. Maybe by 7:50 it's like down here, and then by the time the candle closes, or it's about to be 8 o'clock, price is like right here. So the wicks represent the range that the price took within that hour. Obviously we have our price open and our price close, but between the price open and the price close, the price moved all the way up to here at some point at the hour, and all the way down here at some point at the hour. So the wicks kind of show us how volatile price was within the hour. It shows us the volatility. Sometimes you'll see candles with like huge ginormous wicks and like no body. What that's basically telling you is that price was just super volatile. So like for example, as you can see right here, we have a green candle, which, I mean, this is insane. Price at some point within this hour, it opened up here, came all the way down here, came all the way up here, just to close at the exact same spot. And this is actually called a doji candle, by the way. But what this is basically telling us is that on this hour, price went all the way down here. So at one point, this was a red candle. If people were watching this live, this would look like a giant red candle. So what it ended up doing is it rejected all that price action towards the downside, coming back up and closing above where it opened. And obviously what that tells us is that, okay, the bulls are winning in that scenario because the candle is more bullish than bearish. And what does price do after that? It continues to climb up for a little bit. So candles like these that are like super volatile, and you might see a wick all the way to the downside, and then it closes above where it originally opened and it has like a crazy wick, that might tell us, okay, hey, price got rejected from the downside, and even though it went that far down within the hour, it still closed above where it opened. So most likely price wants to go up. Now obviously don't use that as a sole confirmation for taking trades, but it's a good indicator as to kind of what price is doing. Now for red candles, it's the same thing, just downwards. So for the red candles, obviously your price open on that hour is going to be up here, and because it's red, the price went down, it closed below where it opened, so obviously the price where it closed is going to be below the price where it opened. It's going to be lower. And then same thing with the wicks. At some point in time within the hour, price was all the way down here, it came back up and closed up here. So as you can see right now, obviously I'm on the hourly time frame. However, if we scale up time frames, our charts might look a little bit differently. So obviously if we go to the 4 hour, these 4 hourly candles, 1 hour, 2 hour, 3 hour, 4 hour, would just be one giant 4 hour candle down. And then obviously this 1, 2, 3, 4 would kind of just be a 4 hour candle up, and then this would be another 4 hour candle. And as you can see, if I go to the 4 hour, what does it look like? It doesn't look as bad as it did on the hourly. So people, you know, people will be like on lower time frames, especially like the 5 minute, and they'll see this. They will see this thing tanking, and they'll get so stressed out and they don't know what to do. Bro, just scale back the time frame and see what's really going on. Obviously it's nothing that bad. It's still at the same levels that it's been for a long time. All it did was just take out draws on liquidity down here on the higher time frames, which obviously we'll get to in a future video. You don't need to worry about that, but right now I just want you guys to understand exactly what candlesticks are, why we use them, and how to read them. Alright, so now that you guys understand exactly how to read candlesticks and what they are, we're going to be going into a little bit more depth and kind of going over what forms a high and what forms a low. And so you can look at multiple candlesticks and, you know, kind of understand the patterns of, okay, this is a high, and now we're having lower highs and lower lows, which means that we're on a downtrend. And then obviously the reverse with uptrend. So let me go ahead and open back up the chart and describe this stuff to y'all. So whenever we're looking at a chart and we want to, you know, identify the highs and the lows, we're looking at the wicks of the candles, by the way. We're not looking at the bodies. And so a lot of traders actually get confused by this concept, and whenever they're first like trying to mark out highs and lows, they'll do something like this. They'll be like, oh look, okay, let's mark out my highs and lows. We have a high right here. Okay, bet. Let's mark it at the body. Oh, okay, what's this? We have another high right here. Okay, bet. Let's mark it at the body. Okay, well, this high is lower than this high, so we're on a downtrend, right? But we're looking at the wicks. So what we actually want to do is we want to label the wicks of where these are. So this candle, for example, we would kind of move that up right there, and I'll get to this later, but just know that you put out the wicks. And then obviously this candle right here, we're going to put it at that wick right there. And then what do we know? This is actually a higher high than this high over here. So just so you know, you're marking the wicks, not the bodies of the candle. Now I'm going to talk about what actually forms a high and what forms a low. So a high and a low is formed by 2 candles. So a high is formed by a move up followed by a move down. So we're looking for any 2 candles where the candle goes up and then down, up, down. It's a high. It's like a mountain. We're making a mountain. Up, down. We're making a peak of a mountain. A low is formed by the opposite. The low is formed by a move down followed by a move up. So we're making a low. So for example, this is a low. Move down followed by a move up. And obviously we're going to mark the bottom of the low all the way at the wick. And then now this is kind of where we start putting things together. Now whenever we look into things like trends on the market, right, we're looking into, are we in an uptrend or a downtrend? We can start identifying an uptrend by checking if we have higher highs and higher lows, which obviously signifies we're moving higher in price. If I can draw this for you guys, if we have a high here and then another higher high and a higher low, right, because that's going to move, that's going to be a low right there, that's going to be a low right there, and then another higher high, and then another higher low, and then another higher high, and then another higher low, right? And it keeps going. So what is this? This is an uptrend. Alright, so if I just zoom out real quick, maybe I can find you guys an example. Boom. Yeah, right here. So as you can see, what are we doing right here? Let's take a look at this price movement, right? We have a move up, then a move down. What does that signify? That's a high. The highest point of those 2 candles is right here, ironically enough, on the downward candle, but that's where it is. Okay, let's look at what's next, right? We have a move down, then another move down. Okay, we're still on a downtrend. Then we have a move up. down, up. What is that? That's a low. The lowest point on those two is right here. So now we have our high and our low. Then we have a move up, followed by a move down, down, high right here. Sorry, I forgot to mark that. Now we have a lower high, and then we have a move down, followed by a move up. That's going to be our low right here. Okay, this is kind of crazy. What am I even looking at? Oh my gosh. Then we have a huge move up. Basically, this thing was a giant downward candle, but we move up, followed by a move down. What is that? That's going to be a high. Now we're looking at lower highs, and then we have a move down, followed by a move up. That's going to be a low right here, move up, followed by a move down. That's going to be a high right here, move down, followed by move up. That's going to be a low right there, move up, followed by move down. As you can see, I'm literally just going through this and just marking every single high and low I'm seeing. It's basically that simple. Obviously, you don't have to do every single one. You can just do the more prominent ones. If you do every single one, it's going to get confusing because you're going to have like sometimes with a lower low but a higher high, or a lower high but a higher low, or something weird. And so you don't have to do every single one. But what do we see in general? We see a downtrend. Where most of the time we're seeing, and it's pretty, it's pretty obvious. You can see if the price is going down or up over time, but you can see that where price is moving down, we're having lower highs and lower lows. So most likely price is going to keep going down, and it absolutely tanks. Don't make trades off of this because the trend isn't going to go on forever, and you need to be able to identify the confluences of if trend's going to change. That brings this video to an end, guys. I covered all the points I wanted to. So far, at the end of this video, you should be able to know what a candle is, how to read candles, an up candle, or sorry, a green / upward candle and a red / downward candle. Identify what the wick is, what the body is, what they mean, view candles on different time frames, be able to identify what a high is, what a low is, and an uptrend, what an uptrend is, and what a downtrend is. And you should be starting to put all those together and being able to look at the charts on another level of depth by being able to read what the candles are. So in the next video, I think we're going to be going over what liquidity is. You're going to be able to understand, buy side, sell side liquidity, where liquidity lies on the chart, things like that. And it sounds a little foreign to you right now, but we're going to be talking about that in the next video. And liquidity is the key point. I know I said that candles are the root of everything, but liquidity is like also the root. It's like the bigger root of everything. You really need to understand liquidity, so definitely watch the next video whenever it comes out. And yeah, peace out, guys.